Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Remember, anything said in this piece is only an opinion. It's purely for media publication, and it's not financial advice, not investment advice. It's just to give you a general microeconomic report on a daily basis. That's assuming I do it on a daily basis. Okay, so yesterday, obviously, the big news was in the UK with Rishi Sunak, the first Asian Prime Minister in the UK, has entered number 10 Downing Street. Massive news. Now, the background to Rishi is quite interesting. He was an analyst at Goldman Sachs. His wife is a multi-billionaire, and he went into politics. He was finance minister in the UK. They call it the Chancellor of the Exchequer, if you're not familiar with that term. And he did a pretty good job. He knows how to run an economy. He's educated, he's got economic and finance background, and he's got banking background. He's actually been an employee outside of politics. So overall, it is a good trend that he is Prime Minister. He's class, and I think he'll do a very good job. The actual priority in the UK at the moment is several points. Okay, so you've got three main points. Number one, you've got the public that needs confidence in the government that they're going to sort out the UK economy and give the public confidence that they're going in the right direction, because the cost of living is just going through the roof. So number one priority is to boost the confidence as far as the UK members, the UK public is concerned. Number two is to get the UK, it is a leading financial entity, but to get it back up there in terms of boosting confidence amongst the analysts, investment bankers, economists, and obviously the World Bank, IMF rating agencies. So that's quite a job, because what Liz Truss successfully did in a period of 6 weeks is quite simply destroy all of that status and all of that confidence. And therefore there was a run on the pound, and UK bonds, which are called gilts, were sold off. In other words, investors demanded a much higher interest, a lower price, and a much higher interest in order to invest in the UK. And what they needs to do, it needs to get that back on track and get the UK as a number one financial centre globally, and to make the UK bonds, UK gilts, which is the backbone of the UK economy, make them so attractive that the yield, which is the interest they're paying on those bonds, drops down significantly, and the price is either maintained or rises. Okay, so that's what he needs to do, and that's quite a job. He's got quite a task ahead of him. It all depends on how him and Jeremy Hunt, the finance minister, the Chancellor of the Exchequer, will manage the budget. Remember, they've got another redrawing of another budget on the 31st of October after the last one effectively was cancelled by Kwasi Kwarteng, or by Liz Truss, I should say. So a bit of work ironed out there. You could see volatility in the pound and obviously in the bonds as decisions are made regarding the managing of the UK economy. But if he does it properly, then you'll have the pound going back up there as a major global currency, and the bonds will stabilise. Overall, that's the general background. Let's go on to a few other things. The US markets jumped dramatically yesterday again, following on from Friday's rise. The reason behind that is because there is a feeling of view or a sentiment that the US Federal Reserve will not raise interest rates too aggressively going forward, and will probably back off. I don't believe that. I think it's all temporary, it's all short-lived. That's not going to happen, but that's a view, and therefore the equity markets jumped on the back of that. Someone said to me yesterday, I don't understand, why are the markets up? And I said, in all markets, whether they're bull market, which is rising market, or a bear market, you're always going to have intraday volatility. It's very hard to call where the day is at. You've got to go really on a swing trade and go over a period of time to catch the trend. Otherwise, to do a day trading, it's really practically impossible. Very, very tough indeed. Talking a little bit about day trading and some of the news, there's a hedge fund in the States called Altimeter, which is run by Brad Gerstner. He wrote an open letter It's called Altimeter Capital. It's based in the US. And the CEO of that's a guy called Brad Gerstner. He wrote an open letter to Mark Zuckerberg at Facebook, or Meta, and he's told him, in effect, to get his act together, simply because Facebook is going nowhere, or Meta is going nowhere. It's completely lost track of what it's doing. It's not innovative. Its revenues are under pressure. He's told them to lay off 20% of their staff and cut advertising costs from 30 billion down to 25 billion. 25 billion advertising costs, can you imagine? I mean, it's amazing. Anyhow, so Meta, or Facebook, is a sell. It's been a sell effectively the whole year, as it's got more and more obstacles, challenges regarding getting revenue in and meeting those revenue targets. It's not going to do it. Mark Zuckerberg is lost the way. Facebook's lost the way. And effectively what's happened is that they're depending on cash cow, they're depending on existing revenues or existing clients to support them. However, Facebook as an entity is losing members. It's a thing in the past. The new 16-year-olds, 17-year-olds, they're not interested in Facebook, they're interested in Instagram. It's lucky that Mark Zuckerberg has Instagram effectively, but TikTok now, which is likely to get a license in the US, is going to be a major competitor to Meta, and therefore you could see even more revenue or more membership fall off away from Instagram and go onto TikTok, which is the Chinese media company, and that's likely to get a license in the States, probably because Joe Biden's in bed with the Chinese. And talking about China, you've got Xi Jinping has now allocated himself with more superpowers and more power, and that's caused a downward draft on shares on companies that are trading in China, because they're worried that there'll be more universal powers put on the chairman of the Chinese Communist Party, and it makes them more unstable. So shares that are trading in China and companies that are trading with China went down yesterday as a result of that announcement. China itself is in a shocking state. Its property market's completely collapsed. That's one of the pillars of the Chinese economy, was the property market. That pillar now has been taken away. It's been a complete collapse of the Chinese market. Going on to currencies, those who are trading currencies, the dollar was strong against the yen yesterday. You can see likely the yen's going to break through, dollar yen's going to break through the 150 level. It's gone all the way up. If you remember, if you've been following my YouTube Driving Markets channel, I've been telling you to buy dollar yen from already about 129, 130. It's all the way up to 148 and a half. It came up to 149.76 yesterday, and it's likely to break through the 150 very, very shortly. There was Bank of Japan intervention yesterday, which is unofficial, but there's about $30 billion was sold and all to support the yen. But that's not going to work, because central bank intervention is not going to help when it comes to dollar yen. Against the euro, the dollar was slightly weaker, basically because you've got interest rates out on Thursday in Europe, looking at 75 basis points effectively rise. Could be more, but I doubt it, because I haven't got the balls. Furthermore, you've got on, what else have you got? You've got on Bank of Canada on Wednesday, it's coming out with the interest rate results. Cryptos, Bitcoin is very, very quiet. Really not a lot happening there. The volatility seems to have been completely sapped out of the cryptos. They're not volatile at all, and I think Bitcoin is going to go all the way down to around about the 15,000 or even lower. Overall, I think equity markets will rise a little bit more this week with corporate earnings, and then eventually come off and go all the way back down, especially the Dow, to around about the 28,000 level in the near term. I still hope that's going to finish 25,000 by year end. That could be manipulated by Wall Street and the bankers who want to keep their bonuses in place, etc., etc. But there's been trillions wiped off financial markets this year, and that's going to likely continue. Also, a couple of things. If anyone is a successful trader or thinks they're a successful trader, then contact me, and I'm more than happy to guide them as to some programs that we run for successful traders. Okay, this is Mayor Valensky with Driving Markets, talking about markets as while driving. Have a good day. Hope you're well, and speak to you soon. Subscribe, share with friends, and message me if you want. Have a good day.